yes, man. Let's turn that down. What is going on, man? Let's turn that down. What is going on, man? All right, sound check. So we're looking at Bitcoin here. Been following Bitcoin really close to put out content around the money flow, like trading content. Like if you're trading, it takes a toll on you. You're constantly having to observe and watch, and you have to assess your risk. And you have to say, what is my plan? What is it I'm trying to accomplish here? And where are we at here? Let me pull this up. What is it I'm trying to accomplish, man? And the idea of the money flow originates from, it tries to follow the trend of whatever it's doing. So if we believe the trend is turned up, irregardless of reason, so in its purest nature, it's just technical. And you'll see here, this anchor point, this is on a daily chart, price just began to make a series of higher lows. I mean higher lows, meaning higher lows. Price starts drifting higher, and then each time it comes down, it makes a higher low. And its very definition, that is an uptrend. And so as a trader, I'm trying to trade in the direction of momentum. Okay? Now, overlay that with I'm an investor. I want to try to take advantage of the other side. Like my goal, if I'm holding for a long time, is to get as cheap as possible. As a trader, your goal is not to get it as cheap as possible. As a trader, price is arbitrary. It's a social agreement. I mean, we don't give a fuck what the price of Bitcoin is if you're trading it. It's 22,987. It runs up to 2,800, and then it comes down to 24,000. Then it goes up. That's trading. Price is moving. You don't sit and think like, man, like religiously, I really don't like the price of oil. That's not what a trader's doing. A trader's trying to trade around momentum. And trading's hard, man. And usually you got to kind of limit your window of what you're trading. It's the only way to keep your attention on it, and or limit the number of trades you have, because you got to have a plan, man. So right here we see, and this, you say, well, I don't trade Bitcoin. Don't need to. This chart is the same. Replace Bitcoin with Apple. You know, I'm just showing it to you in real time. So in the money flow in chapter 2, we talk about the moving average is the foundation of the money flow trading system. An indicator, a moving average is an indicator in technical analysis that helps smooth out price action by filtering out the noise from random fluctuations. Now that's the technical, you go to stock charts or go to, it's a partner on stock charts, has the Encyclopedia of Technical Analysis book, forget his name now. In the front of the money flow, I say a fractal pattern is never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. So what I'm trying to do as a quote trader, where I'm taking advantage of price movement, meaning I want to be long if it's going up and out or short if it's going down. By its purest definition, that is trading. And the hard part on that is it requires incredible concentration, and people just sitting there. Like being a professional blackjack player, you don't passively do that. Like you're there, you're observing, you're watching, you have tools, you have indicators, you have patterns, you have risk manage it, you have money, and you're setting predetermined exit points and targets. Same in poker, man. There's hands you fold, and you're like, fuck, I can't win this one. You don't go, well, I lost the last 3, so what? Why not? Like, no, you have to continue the discipline no matter the randomness of what is brought at you. So what if you could get in, get stopped out, get out, and get stopped out? That's trading. And the moment you go, I don't want to do it, well, you're not trading. Like trading, that's what it comes with, man. And so the money flow tries to trade in the direction of the trend if you're trading. Now, notice the moving average alignment here. Let's see if we can't take it in a little bit. That red dotted line, dot, that's a 5-day EMA. Next one down, 10. Fractal pattern. Next one down, 20. 5 goes into 10, 5 goes into 20, 10 goes into 20. They're just fractal patterns. When these will line up, 5, 10, 20, typically means price is now moving higher. As a trader, right, when this happens, I know from here, I'm looking to trade, if I'm doing short-term trading, to that upside, man. There's no reason to trade to the downside. The numerical alignment, the flow of water is just down, man. Like it's the general flow until it's not. And we call that resistance, right? And we were saying earlier, we've been saying that right around in here, Bitcoin has this level of resistance, usually defined by 3 points, 1, 2, and now we're doing another one. And so right now you're seeing this dirty dance it does with, is this going to be support or is this going to be resistance? If this breakout on the daily chart continues higher, which technically that's what it says right now. And you could go find every reason to be nervous or scared, whatever. 5, 10, 20, price is above it. You got price, you got the 5-day, you got the 10-day, you got the 20. They're all numerically aligned to go to the upside. We got through this resistance here, right? Through this, and now we're sitting at it. And this is like right at a point, man. Like they call the indicator moving average convergence divergence. Shit is converging there. This is the war that I talk about. When moving averages cross, it might be a buy signal to you, not to someone else. And so it's a zone of conflict, not of assurance. Like you're like, oh, it's a breakout, it means it's going up. Yeah, but it's a point of conflict. Directional change is happening, like social agreement change. People that own these assets are changing their mind. They now like it. Let's go see. We'll drop down for just a second. Let me take this back down. We'll come back to Bitcoin because we got a shareholder meeting right now. Look at ERX is what we've been using. Make this a little bigger. Now, what the direction that I'm trying to trade in is a fractal pattern that happens at turning points in price. Right? Hold on. I'm making a big mess here. I got to readjust my screen. Right here, that's a fractal pattern. That's a fractal pattern, right? Where you see price moving above that green line. Fractal pattern. Meaning when it happens, as long as this 5-day, 10-day, 20, as long as they stay on that side, you just assume everything's going to keep going. And that's what we see it do. And by making that assumption, not talking ourselves out of it, but making that assumption, then betting in that direction, and all you got to do then is just let it go. And as this thing goes higher and higher and higher and higher, your position in the trade goes higher and higher and higher and higher, right? This is, and then we're like, okay, well, how do we take profits? So if I buy something and now it's moving, again, talking trading, not investing. You got to be able to compartmentalize. I don't know why that confuses people sometimes. These indicators up here are for traders. They can't be for investors, for sure. And we can talk about that later. You should be able to catch on how trading could help an investor. To me, it's a no-brainer. And we know these zones here on this thing called the RSI, we know that's where price starts to turn around. And we can go down. Doesn't mean it's completely done, but it lets you know it's turning around. What this does, though, is it gives us a fractal pattern because it happens a lot. That's a good spot to trim a trade or take money off the table. So you're playing poker and they're dealing, they've given you some money, you have some money, and you're like, you know what, dude, I'm gonna go get a coffee. Let me get my chips. And you leave. That's trading, right? So you're in, you're out. It's not I have a fundamental belief that that's investing, and that's fine, but that's not trading. And that's where it gets tough. And so you gotta have an entry, which should be a fractal pattern telling you when this happens, shit, this tends to happen. That's all trading is. Trading is betting in what you think this possibility. So as you're playing cards, playing blackjack, you get an 11, and the dealer has a bust card. Everyone who's ever played the game would tell you that's a hand you double. Why? Because, it's a fractal pattern. Like, this is the pattern, the numbers of the cards, man, when they line up this way. Well, that's very similar to what we're seeing here, meaning price cannot go up without going above this green line. And it also can't go up if the 5-day, 10 days don't cross. So all these points of confusion or confliction let us know is, hey, momentum is changing. Doesn't mean I know where it's going, but I know when it turns and goes up, this is what it looks like. And so I just go around looking for that fractal pattern. And for me, it flows, and it flows like this. And so I'm trying to see it. Is it moving sideways, going up, moving sideways, going up, going down? The moving averages can help me determine, these things. And that's all it is, man. It's like painting, laying over the movement of price. So let's get back on Bitcoin for a second. Now that was a 1-day chart. This is the 4-hour chart. Let's back this up. So where are we at right now in Bitcoin? Oh, we're pulling back, man. Now we're coming back down, which is why I said, hey, I'm putting a stop on here, man. I'm going in, but we got to put a tight stop right in here. And so the risk we're playing is right here. That's the risk. So this trade that was here, I took some off here, right? Took some off in there. Took some off in here. Took it all but tiny bit off here. Then the market turns right around. Look, turns right around and starts to push back up above the 20. Because I got a pretty reasonable anchor point here. Because if it goes back below that, we're in full-blown this, right? Like it's now a stage 4 decline. And I'm under the assumption, now here's where it goes wrong. If that doesn't happen, then it's wrong. I'm under the assumption when it goes into that, it's going to do that move for a certain period of candles. We don't know how many candles, so back to the 4-hour. So here you see when that happens, right? You get a big, long move. Here you get a big, long move. We don't know, right? It turned. So it turned and went. So I'm like, okay, cool. I'll get back on there. But if I'm wrong, I need to get out. And so now what? You've gone from a trade, downsizing a trade, getting out of a trade to back into a trade. That's trading. Is that stressful? If that's stressful for you, you can't be a trader, not a short-term trader, not a momentum trader like that. Then you got to say, okay, well, I don't really dig that. Well, then you back it up, man. And then you go to where I'm maybe you're just position trading, which is what I do with a lot of positions. Let's look at so let's look at the 2-hour. Let's drop this down on Bitcoin right now. And look, it tried to push. We had our RSI at your stage 3. It broke, started coming down. Stopped where it stopped before. Pretty tight though, right? Look at the MACD started to turn. Stochastic started to come out. So we were starting to see a money flow stage 1 forming and moving on this 2-hour. Now I'm not trading on a 2-hour, but I can look at the 2-hour and say, okay, I see what's up. I see what's coming. And if I make my moves on the 4-hour, price pushing back above the 20, if it's going to run again, I want to get in. You say, well, why could it run again? It looks like it's topped out. Remember, if we back up to the daily, look, that move's just getting going. So on the 4-hour, it feels like we've done a lot. On the daily, we just broke out, man. And so that little move then on the 2-hour becomes this big exaggerated move, breaking support, going into a stage 4, setting up. Price starting to go sideways. Price breaks above the 5. The MACD turns. Price then looks like it's going to go up again. And then it's breaking out on the 4-hour chart when you get down. But you get to the daily and it's like, fuck, it barely moved, man. It's still inside the breakout candle here. And so it's like, okay, how many swing trades in this pattern? That's all it is. If price is moving, oil's moving, bonds are moving, right? And then moving, maybe it only goes here, starts going, and then it takes off again. That can happen. Most of the time you're getting those big long moves, but then sometimes you don't. It gets wanky, and it's like, what do you do in that gray area? If you're aggressive and you're catching another break, jump on it, man. But then guess what? You put parameters. You say, okay, cool, and put my stop here. What is, deal the cards. What if it comes back and hits it and stops you out? Maybe is that maybe? Whoa, what the hell was that? So that's trading, baby. Let's see. Working overtime. As long as we're in love with the 5, we're good, baby. Yeah. So on a daily chart, Bitcoin doesn't look bad. Let's refresh it. It's been a minute. It don't look bad. We're still above the 5-day moving average, right? But when you take this time down, and that's what we're trying to show, multiple time frames, how it could change the way you're trading. And maybe you don't do that on Bitcoin. Maybe you do that with Nordstrom's. Maybe you do that with Exxon. I don't know. You don't have to do it with any of them. I'm just showing you that if you're wanting to trade things, understanding the moving averages, and it's not, the crossover is important, but it's really about the alignment. And look, this is why I say when they come together, it doesn't always mean it's a good signal, bad signal. It's a zone of conflict. These are areas of conflict like this and this. This is price sentiment changing. And as a trader, I mean, at the end of the day, you don't give a shit up, down, whatever. Especially if you're a short seller. Now, I'm not short selling this because on the daily chart, it's above the 20, 5-day, 10-day, meaning it's configured to move higher. So when I get down here lower, I'm not looking to short that. I'm looking to be on the side of what I think is the win, which is the daily. So once I drop that time down, you see it surging here. But hey, if I'm wrong, give me my money. Let me step aside. We'll see. Now, what can mess you up, and you got to get this as fast as you can, and sometimes this is where experience or hunches or the way you're feeling maybe. Let's say that comes down, bangs you out again, and then comes back up. And so if I put a stop in and I said on half the position, meaning I'm given the benefit of the doubt for that. Maybe we form a new stage 1 here and it just keeps bouncing back and forth, like it did here, like it did here, right? Like it did over here. As this stage 4 was forming, you can see what big moves back and forth, back and forth, back and forth, back and forth, back and forth. And then moment of conflict. Look, went above it, below it, above it. Then it rips up. Look, came back down. What? Closed above it, right there, and back above. Like it's chaos, man. I mean, it's chaos as you look at it, and everyone's opinions and look. But one thing is when that alignment is like that, it's going down until the alignment changes, and then we start to see that right there, right? Moment of confliction. Price is now banging. It's just a social agreement. We hate Bitcoin. No, we love it. We hate it. We love it. And that's how it drifts, man. So find that alignment that matches your lifestyle. Yesterday I did that video. I was making fun of people. Oh, I can't do it because of my job. It's like, really? You ain't got 3 minutes when you're pooping to look at a daily chart? So it's like, that's not, just say you don't want to trade, bro. Like, be honest with yourself, man. Like, why are you making up stories? I can't do it. Yeah, you can. I told a buddy of mine, I always think about this. It was like a year ago. Numerical alignment. The moving average is the foundation of the money flow trading system, an indicator in technical analysis that helps smooth out price action by filtering the noise from the random price fluctuations. To be fair, when I closed out Bitcoin earlier, the 5-day had crossed below the 10-day and was going below the 20, and price was right here. And that was a sell signal. So if you're looking at this is a sell signal. And this is where it shows you trading is not easy, man. You can like moving in and out of a stock and it'll mess with your mind. So you get a sell signal and let's say you honor it, boom. And then it turns and you go, fuck, I knew that was going to turn. So then the next time you don't honor it and bam, it crashes down. And now you're on the wrong side of your own strategy twice. And it's like, fuck. So at some point you just got to stay with something, let it happen. And if you're wrong, you're just like, fuck, I'm wrong. But hopefully you're wrong and you planned it, because if you're wrong and you planned it, you can do that over a series of trades and see, do I come out ahead or am I coming out behind? And if you're coming out behind, you can ask yourself why. And then as you begin to go, why, if you document that, which is what I was doing with the money flow thing, was documenting it, then I can see, okay. And I realized that, the faster I can spot this shit, Like these are the whipsaws up here. Faster I can spot that, then some things we can take into consideration. Like one thing I do, let's say I get whipsawed again, the next trade is like half the size. And you're like, what do you mean? Meaning, rather than not take the trade, like if you had a loser, you should start going smaller and smaller and smaller till you get a winner and a winner. Does that make sense? So if you lose continuously, you should lower your bet until you're betting just about nothing. Meaning, yeah, you're literally buying 20, like, and I'm using Bitcoin as the example here. It could be Delta Airlines. So if we're swing trading, and I don't know what time frame you're using, but let's back this up while I'm on this. Let's say we're using the daily here. And on this, on my swing trade that I have going, where I talked about this is my target because it stopped here so many times. And this is Money Flow 2.0, but it's drawn. Look at this level. You ain't got to be bright to see that, okay? And there's another one up here. So as traders, if we're trading price volatility, I mean, we need to protect capital. We're trying to put capital at risk to make money. And we want to have more than one trade going. So if we're fucking up Bitcoin, maybe we'll get Delta right. And if we're fucking up Delta, maybe the oil will work right. And if I'm trading 6 or 7 or 3 or whatever you can mentally handle on whatever time frame, so don't stress yourself out, man. If you're working a lot, good. You use the daily chart. You look at it one time a day, you make your move. Nothing is going to happen in one day that changes this. So when you get home, and you look at it, and you go, okay, fuck, it's at 31.78. Where's my stop? Right here. You go and put that in if you wanted. I can look at it so I don't. If you don't have time, this is what you do. We used to call these into a broker. Once they're called in, you got to call him again to change it. So it made it a lot easier to kind of stick to your original plan. Now, anything in this zone, I'm cool adding to the trade. So I kind of expect I'm going to be wrong at first. So I'll nibble in. There's no commissions on these. Bitcoin, you can't do that as well. That shit costs. But, you know, these oils, man, like, look, that's 2 weeks, man, moving sideways, dude. Now you got a little trade going. As this thing moves higher, you move the stop from there, you know, to up there, man. So if you're truly trading, and I mean trading this, not buying, holding it, you're trading it. Do this. Go play with this tonight. You probably already do. Shit. Parabolic SAR. Same dude who created RSI created this. Now, I don't want you to necessarily, you could. I spent like 6 months of my life trying to figure out a combination, a parabolic RSI combination to where I would just put it in a computer and let that fucker trade it. I about went crazy. It's like, yeah, like I had a dream one night. This is when you're trading too much. That I figured out RSI parabolic combination that it would buy 15 to 20 things, and when the parabolic changed, it took the position, placed the stop 1.5 average true range, and let it drift, and it honored it, and then got on the other side. And it was running it with like 16 different things, and it was using the RSI, and we would look for, you know, buys down here, and we're looking to get out of shit up here. There's no shorting. It's just buying, trimming, buying, stopped out, trimming. And this machine would run. I had this dream that I had come up with this combination, and I was just printing money, and then people found out, and they were like going to kill me. That's when you've been trading too much. That's when you need a break. Let's see. So Delta Airlines, what do we see? Point of confliction, 5-day crosses, 10-day, 20-day, breakout. Meaning that day right there was your breakout. You could add here because what we're anticipating, price is going to go from here to hitting our zone, which we said is $36. Now, look at that little dot there, the parabolic SARs. Hold on. My God, Joe. Why do I bring up old pains? Old obsessions. As price moves higher, the parabolic SAR moves higher. And there's other versions of this, but this dude created this. In other words, as the trade makes money, it looks to take it off. So if you go to my Bitcoin on the 4-hour, watch what would have happened. And I sometimes dip into this, and I'm like, what's wrong with you, Gerald? Oh, wait, we can do it over here. So take it down to the 4. What is wrong with you? Go to therapy. Oh, now we're under the 20. Motherfucker. We're about to get whipsawed. Parabolic SAR. Now look. Look what happened on this. When it's on this side, that's where it's saying, that's where you get out. When it switches to the other side, which I'm right up in here, it's saying you should be short or out. Now, what you'll notice, though, this is why I don't sit around using it a lot. What you'll notice is that shit happens a lot around these RSI points. Because the higher it gets, the closer and closer and closer it moves the trailing stop to price, because it assumes a price change. Meaning the parabolic SARS is not confirming the money flow, but it's saying, listen, price goes sideways, it moves up, it goes sideways, it moves down. And as it moves up so far, it assumes it's going to turn and move the other way. That's not a value call. That's not saying I think this stock is going to this. It's just normal price volatility and movement. That's all it's measuring. And it doesn't give a shit up or down. Now look, when it gets in these boxes, you'll see what? It gets all wacky whack. Why? It's being whipsawed, man. It's being whipsawed. So if I'm whipsawed out of this next one, what's going to happen is the next trade, because if this bangs down, I'm going to cash. Getting out. Got to preserve capital. Wait on the next setup if I'm trading. Okay? Now, if you're position trading, what does that mean? Meaning I might take some down. I may ride half of it down and look to add half, however far it pulls back. Maybe it goes back into box on the daily chart, which will what? Pull price down here. That's no judgment on price or Bitcoin. It's just movement of volatility. So if I'm a position trader, I'm waiting on that, and I'm waiting on what? This setup here, so I can get in, and I'm waiting for this setup over here so I can get in. And I'm just riding the drifts, and I'm waiting on the stage one setups. Some will be higher, some will be lower. I'm doing it for a long period of time. So on Uber, I'm position trading. What I mean is by trading, I'm accumulating stage ones to bring down my price point. I think the stock is worth way more. Not in this current environment, but that just gives me more time to build my position. 1 share, 5 shares, 10. 2 years later, it breaks, it runs, boom, boom, boom. Everything's turned. Stage threes become profit-taking events because I'm position trading it. That's different than buy and hold, where I've owned Pepsi for 14 fucking years and it doesn't get bought or sold. It just gives me money and I just hold it. Again, different game, right? That's not this. That's not this. And I hope you see that. That's the difference in trading, man, is the time frame and the type of trade we're doing. You know, and if you're scalping, then that's got its own set of rules, right? So if you're an investor, don't talk to scalpers. They don't know shit about what you're doing. They're doing different things, man. I don't talk to day traders. Not about where I think the market's going, because they may be like, fuck, dude, it's getting smashed. And for him, that means it's 1 day down on the daily chart. So if I'm position trading, I didn't even notice that, dude. I didn't notice that little drop. Like, look at Uber. What, last 3-4 days up? So as a position trader, what am I doing on Uber? I'm trying to capture what I believe are the bottoms. I listen to Trapper, oh, Wall Street Trapper, you know I love you. He says, nobody can pick the bottom. Bullshit. You can't. I can. I pick all of them. I don't know what he's talking about. I pick every bottom. OG buys every bottom in Uber. All of them. So when he says you can't buy it at the bottom, Uber, bullshit. What do you mean I can't buy it? I just did. Bought some there. What do you mean I can't buy the bottom? That looks like the bottom to me. Unless you mean that actual moment right there. No, can't do that. Can't do that very well. But I can buy them pretty damn close, right? Right over there. So here's the support zone. You can't buy the bottom. I'm buying it. You know, like drifts higher. And then up here, is that true? Does that mean I can't buy the I just did. But I think we're seeing it different. What he's talking about, and I'm just picking on him, what he's talking about there is nobody knows where it's going. I agree with you there. And I don't know where the fuck it's going, but I can buy the bottoms. So look at Lyft. Broke out, Now, if you are in this, if this is a trade and I'm so busy at work. I'm so busy, Gerald. If that's you, good. All right. So now today, guess what you're doing? You're buying Lyft. So you go to your bathroom. Let me get 5 shares of Lyft. Boom. Where's our target if we're trading? Right here. And you go, yeah, but Lyft was way up here. No, that's a social agreement. We're not doing that. I don't give a shit where it was. This is stage 2 breakout down here. So wherever it was has no bearing on this as a trade. So as a trader, I don't listen to those people. I'm putting my stop here if I'm trading this. If we're trading momentum. You can't buy the bottom. Yeah, you can. Right there. There's your buy. Now we're breaking out. Today we're adding. Where's your target if you're trading it? Right there. It's a $6 implied move. Now, if you have a fundamental belief that the market can't do that, then you can't trade that. I don't know how you trade the money flow then. I guess just when times are good, come back. But in the meantime, I'm going to try to trade it. Now, what you got to cover for yourself is how much of your liquidity do you want to try to protect? If you want to protect liquidity, like having money to make moves is what is important, you have to take some chops. Get in, you lose a few bucks, you're out. You get in, you lose a few bucks and out. That could happen 2-3 times until price runs. Now, if you go to now with that just said, if we go to the daily chart on the S&P 500, this is where the bigger picture comes in. We're on the daily chart of the S&P 500. If it's below that green line, listen to what I'm saying. The chances of that trade working become very fucking slim. Okay? This is the wind. And if the wind is pointing down and you're like, well, how do I know? I just told you. These lines are on this side. Over here, they're on that side. Over here, they're on that side. And as we look at it, where are the lines right now? Up, up, up. Where's the market going? Up. And they're like, yeah, but what about, nope, going up. That's the money flow. I don't care. Nope, don't care. 5 days up, 10 days up, 20 days up. Price is above it. Go down here to MACD, pointing up, up. Everything says up. Where's the target if I'm trading? If I was trading this and I wasn't a little B, all worried about the market, and I was aggressively trading the money, I would be picking up the U Pro, the TQ with the idea of selling some here. And then guys, well, why would you sell it if you think the market's going higher? Because I'm a trader. This is trading. If you don't want to sell it, then that's cool. Move that, take the trader hat off and pick up the whatever hat. Get clear. So I don't talk to traders about my investments. Don't care where they think the market's going. They're doing a different game, man. So right now, if I'm trading the U Pro, which I got a little trade on, by the way, up in here, I'm probably going to be what? Selling some. Why? Because I'm trading momentum. I'm trading momentum. I know what the bottoms look like. Over here, it didn't work. Look what happened. Turn. Right? Now, when it turns, what did that tell me? Well, where's price right now? Below the 20. What does that mean? That's bearish, man. It's a zone of confliction, right? Bearish right there. Boom. Sell. Buy. I mean, that's a quick trade. And you got to ask yourself, can I move in and out on that? Because look what happened the next day. It jumped down. You're out. 5, 10, 20. If you're trading to the upside, you're going the wrong fucking way. It's headed straight down. Everything is aligned the other way. 5 cross 10, 10, now 5's below 20. That's negative. That means everything is just turned. There's now conflict. We had conflict here. It didn't come back. Didn't work. You know? Now, step back a little bit. Yeah, over time, everything goes up. So I believe that over time, valuable assets go up. So the further back we go, at the end of the day, most things go up. If you trade options, they can go to zero. Okay? If you trade Pepsi, doesn't go to zero. Now that's not trading, but my point is, let's say you got caught in a trade in Pepsi and you fuck all this up, you could just sit and wait. And I was explaining to someone, let's say you said, I'm gonna wait and see if this holds tomorrow. You got discretion, you're not a robot. And the next day it bangs down and you're like, well, fuck, RSI's 30. I know how to trade. I'm gonna wait and let this stage 1 set up, not beating myself up. I gotta play the hand that I was just dealt. Right? So I'm going to trade my way out of this. Now, you may think the only way you get back to even, that you make your money back, is in this thing here. No. No, you could have bought it up here, fucked around, got caught in the trade, tried to do it here. It took you back down. Now you're into here. You're buying it. It runs up here, bangs the RSI. You take some down. You're trading a portfolio of trades, not one trade. So the good thing is you didn't sell it down here. You're getting out higher. Now you have capital to apply to other trades. And what if that other trade runs for a $40 run? Did you need to be in this thing here to get your money back? That's what people don't understand. They don't understand trading. Meaning, I could buy a property. That property ends up being a bad property, but I lean on that property to buy a property that I ended up getting a 5X in. Does it matter that I bought a property that didn't work or that property didn't work? No, because I used it. And so that's trading. There was somebody that said that in the Discord. And I'm not picking on you, sir. It just tells me you don't understand trading. Trading. I could trade. You give me, I have $10. I hand it to you. You give me some gas. I meet a guy's like, man, I need some gas. And I say, really? I need it. You using that blower or that weed eater? I'll trade you this gas for that weed eater. Now I got a weed eater. Right? And I got a weed eater and I go, and if I can sell the weed eater and get where I could get a push mower, I still need a weed eater. Now I go push mow some properties. I get enough money that now I can buy a weed eater. And you go, yeah, but you sold the first weed eater at a loss. I know, it's to get the mower so that I can make money. So now I'm buying the weed eater. And so I'm back in it. I may move in, out, move. You get what? That's trading, man. So to think that, well, I'm down in Romo, that's the only way. Is that really the only way you could get that money back? So when that runs up and tags an RSI, this one's gone straight down though. This one's fucked. But like, let's look at SOXL. If this drifts up and tags RSI, even if you're underwater in it, you take some down. Then it keeps going, good. But then it stops, then it rolls over, boom, you're out. Technically, yeah, you're down from where you got in that, but you roll it over here into oil, and oil, boom, takes off. Boom, man, you got your money back. You traded out of a trade. The idea that you're married to this, and this is the only fucking thing. I got to stay right here. I got to just keep. That's not trading, man. That's not even a trader's mindset. You could buy a piece of land to trade it for a lot that you end up trading for a duplex. They end up selling to buy. That's how you got to think of trading. And you're not married or locked in. As a trader, we're not taking losses. We're moving our capital. Okay? You got to think on that too. So look what's right now breaking out. I was fixing to add to this bad boy. If you want to go ahead and do it, I got to text it. Give me a second, man. You're seeing live on the go. Hold on, I got to pull up E-Trade. We're buying some FCX. Just 5 shares. All right. Let's see what we get filled at here. Buy 28.68. $28.73. Oh, motherfuckers. That's those guys front running you. Oh, look at that. Oh, GP just pushed the market. I bought so damn much Freeport McMoran. I pushed the market. Bam. I was the last purchase. That's what that means. You know that, right? We just moved the market right on YouTube. Somebody else want to move it? Go pay $28.75. I dare you to pay 2 cents more than I just did. Let's move it up. Come on, man. It's 2 cents, man. Don't be greedy. Let OGP have 2 cents. Give me 2 cents, man. Locking in profits. Put money in your pocket, a predetermined point at which an investor exits. This is chapter 8 of the money flow. Exits a profitable position. Profit targets are part of many trading strategies that technical traders use to manage risk. Before an investor enters a trade, it determines a profitable exit point at which he will sell out of the position. Traders establish profit targets to avoid letting emotion take over a trade. Profit target can be expressed as dollar amount. Now, not everyone's a trader, okay? Oh, come on. Tell me you guys moved it. Let's move it, man. Come on, man. Look at that. Come on, man. Can I get 28.78? 28.78. Come on, man. Somebody go pay 28.78. Buy one share, man. Let's walk it up one share at a time. If there were technically, I believe, if there were no buyer, no sellers, technically you could do that. If there was a limited number of suppliers and there were hundreds, maybe probably need thousands of people, and you just do it in waves. One guy buys 5, next guy 5. If there's no real commercial weight on the other side, I bet some of those pennies, you could walk it right up, man. That's illegal as fuck, but you could do it. Oh, man, we're back down. You couldn't give OG 2 cents, man. Greedy bastards. Anyway. So, if we're setting this up, now this is not a trade, but let's pretend like it is. This is a good one, dude, man. This is on copper, world's largest copper mine. You go do some reading tonight, man. You'll feel smart. Here's our pivot point. 1 day, 2 day, 3 day, 4 day over the 5. So now we can back it up. We go stage 1. Come on, man. Give me a nickel, man. We got stage 2. Come on, man. Uh-oh, somebody moved it. Hey, don't go tell on OG. We'll get in trouble. I don't think we could move it, but I'm just kidding. Oh, we're up a penny, bro. Hey, I appreciate that, man. Give me a penny, man. Somebody pay 20. Somebody, man, take it for the team. Just go pay $29. Take it up, man. Take it up 24. I don't think you could do that, but I wonder if you caught it on the right day. I bet shit like Bitcoin, penny stocks, you actually could organize, which is what Reddit and them do, right? Like, there's people that do this. It's highly fucking illegal to organize a stock movement. That can get you in jail. I'm just acknowledging that right now. This is for fun and entertainment purposes only, if anyone in the FBI was listening. Yeah, so my stop, if I'm trading this, and I'm a guy that's really busy at work, Gerald, it's really hard for me to focus. I know. We're going to put your stop right here. So put it in when you take the trade. Go put trade in, come back, put in a stop loss for around $24. Your target is going to be the first stage 1 of the previous money flow, okay? In other words, another way of saying that is previous high, meaning we're expecting this pattern here. So on the way up, we look left, right? On the way down, we look left. So if it's going up, we're going to look left, right? Now, that's the first one, right around in here. First stage 1. The second one is previous high. So the ultimate target is previous high. Rarely gets there when you have that zone, the 200. But now we have a trade mapped out. Now we're trading. So we bought 100 shares. We got $2,873. We're putting a stop down here at 24 and some change. Woo! That's a $400 risk, baby. And what we're hoping is this thing starts to move higher. And that's what the moving average is coming together is telling us. Same thing it told us up here. Now up here, notice it put in a top and then zoomed in. Same thing, put in a bottom, and now we're moving up. So we're hoping for nice movement here. Yeah, I wish I could move the market like Elon. You'd be watching me on American Greed. They'd be like, YouTuber Gerald Peters moves the market. 28.68, see, it already came down. That means, but I'm going to be texting this out in just a minute, guys. That's it, man. Back to Bitcoin. We'll wrap it up here. It was pushing. Now it's not pushing, right? This is the daily chart. I got long again on the 4-hour. This is a new trade. Not the same trade. New trade. Meaning the other trade is over. We got in. I got my money. I got out. But guess what? I'm back to the table. I had to go pee. I'm back. Deal me. Right? That's how we're looking at this. Stage 1, there's my breakout. As long as the moving averages stay on this side of the line. What are moving averages? Technical indicators give us insight price direction. We have predetermined targets, previous high, bam, right around in there, right? We still think it's going up. And then the next one is what? RSI banging, boom, 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 boom. Now what? We expect it to start going sideways. It did. Started to sell off. Got a sell signal, actually. You're like, what's a sell signal? This right here. The moving average configuration. It was crossing below. Price was going down. And then what? Turn right around. If you were short, you got a problem now. Say this was a stock and you were shorting it because it did that. I would never short a stock if the market's going up. And how do we know if the market's going up? Well, Bitcoin, go look at the daily chart. Is it above the 20-day or is it below it? It's above it. That tells us the trend is to the upside, right? So I'm looking for trades that confirm that until this configuration changes. So I'm trading, swing trading to the upside. And if it breaks and runs, we just let it go and go and go. And what do we have? Predetermined targets. We set them. And if you look up and there is no high, it's RSI. You let it hit, take money off, pulls back. As long as the trade stays bullish, meaning even though RSI hit here, what do I want to do? I want to sell some. I'm trading. Why? That's your signal. And then what? It ran out. Well, it was being gracious. It gave you a little more. Boom. Don't be mad. Be happy. And then where we got stopped out is where we took gains over here because I got in down here. See what I'm saying? So now this starts over. New trade. Boom. Here's the balance. So you're never keeping the highest balance in trading. Sometimes people, we're like, you're going to make some money. You're going to lock that in. And that's what that parabolic SARS that I opened with is all about. That was just a way that I don't think he ever officially used it. He was playing with it. Where as the trade moved in profit, this thing got closer and closer to price, anticipating a turn. Not predicting, just common sense. Shit goes up, stops, comes down. I mean, I hope that helps, man. Hope that helps. Developed by J. Wiles Wilder, the relative strength is a momentum oscillator that measures the speed and change of price movement. RSI oscillates between 0 and 100. According to Wilder, RSI is considered overbought, means take profits when it's above 70, oversold when it's below 30, a buy signal for investors. Signals can also be generated or a profit target for short sellers. Signals can also be generated by looking for divergent, failure swings, centerline crossovers. RSI can also be used to identify general trend. Now, I don't use it the way everybody in there says, but I understand it. Anyway, keep an eye on Bitcoin, man. I'm just using it as an example for in real-time trading. Like, we're trading during the day. We're trading. And it's just an example. So follow along. You could apply it to whatever. God bless.